Hey guys, so in this video, I'm going to share with you my experience of working in equity research by giving you a taste of a day in the life of an equity research analyst in New York working at a sell side investment bank. A sell side research is basically like either you're on the phone all the time and you're talking to management or you're talking to clients or different investors, or it's like a library where you're just basically sitting around reading and just thinking and typing and updating financial models. So my day starts off at 6 a.m. I'll get up, and the first thing I'll do is normally check my phone to look for any messages about corporate events that might be happening, because that'll set the rest of my day. If, for example, a company like S&P Global has bought IHS Markit, so a big merger and acquisition deal, I know that's going to define most of my morning in terms of my work. Traders will already be in around 6:30, and they'll see that piece of news and they'll be emailing us in equity research asking us, hey, what do you think about the numbers? What do you think about the deal? Where do you think the stock's going to go? So immediately, if that kind of news is happening, I know that's going to be my work for the day. If not, I'll try to keep it easy. I'll get ready. I'll make some coffee. I'll take a shower, get dressed. I try to be really chill in the morning because in equity research, I know as soon as I get in about 7 a.m. or so, I got to be ready for a call coming in, whether it's from a salesperson or a client, or a hedge fund or a long only investor. And they're going to be asking questions right away. And they want to know your opinion and your thoughts immediately. So I need to be fresh when I get into the office. So I usually try to keep the morning pretty chill for myself before I get in. So 7 a.m. is when I get into the office. And there's this 20-minute period before the 7:20 a.m. meeting. So if it's an earnings release day, so for example, if a company releases their numbers, I basically have that time between 7 a.m. and 7:20, hopefully to try to get all the analysis done. So quickly download the earnings release, look through the different numbers, do the analysis real quick. All the sheets are prepared. Think about where the numbers are going and what the numbers mean, and then quickly put out a view of what's going on in the quarter, what this means for the company, and what this means for the stock. Usually, which direction do we think earnings estimates are going to go? So that's our quick earnings flash that we'll put out. And hopefully, if it's done fast enough, that's just in time for the morning meeting, which starts at 7:20. Now, what that is research analysts getting together with the salespeople, and it's the different analysts pitching different ideas, talking about the research, or just talking about something interesting that's going on in the sector. So they're giving it to the salespeople, and they're taking notes on their notepads, because then they're going to take that information and start to distribute it out to our clients. So say, for example, I had this idea on MSCI. I put out a report. What I'm doing at the morning meeting is I got 30 seconds to a minute. And what I'm going to be doing is pitching that idea, saying MSCI got this new business, ESG, is going to accelerate growth. Our numbers are here. We think it can move street estimates up. Our valuation points to this. Tell clients to buy this right now, or we're pounding the table at this price target, right? So we're giving very quick information to the sales desk so they can start to distribute that message out to the buy side, which is based on our research. And so when you get back to the desk about like 8:15, 8:20 or so, that's when you have some time before, if there's a conference call, which usually happens around 8:30, you have some time right before the call to just quickly get prepared for the call itself. You might get on a call with the client, talk very quickly about what you think about the numbers, and then you jump on the earnings call. So that's when you're listening to management talk about what's going on with the company. We're doing this and that. These are all the numbers. And at the back of your mind, what you're doing is also preparing your question, because depending on where you are in the order, you want to have a relatively insightful question. This is where people make fun of sell side analysts, because we're having all these different calls going on at the same time. So you'll hear a lot of, oh, great quarter, guys, and questions like, hey, can you give me some color on X and Y? It's because we have so much stuff going on that we have to default to just basic questions. But at the end of the day, usually we do try to find the particular points of the story to ask a question on. For example, there's a project like ESG for MSCI. We're trying to figure out how that's going to impact growth in the business. So we're not always just asking silly questions. But the point is, we're looking at the numbers, we're taking what management's saying, and ultimately what we're doing is trying to get a sense of where the numbers will go so that we can start to inform our clients of what's going to happen with the stock. So about around like 9:30 or 10 a.m. or so, around that point, you'll have a secondary call with the company's management team. Might ask things about like tax rates or depreciation, things like that are not really talked about in the call, but are important for the model. And the nice thing is, if you're a retail investor, is Regulation FD is a real thing, financial disclosure. So everything that management says in private is also said on the conference call. There's usually not a lot of places where management will say things that are only behind closed doors. Maybe in some dicey sectors, I hear REITs are a little bit shady, but usually they're saying everything they're saying publicly in private as well. Okay, so around 10 a.m., 10:30 a.m., right at this time when all the earnings call is done and the call with management is done. At this point, calls will come in. We might make a call out to different hedge funds. Salespeople are making calls. What we're doing is we're just on the phone all the time. And a typical conversation would be like, hey, what do you think about Gartner? What's the driver of the stock? What's going on with the stock? Why is it moving in this current direction? Where do we think it's going to go? What are the upcoming catalysts? All these sorts of things of to very quickly get an analyst up to speed on what's going on in the stock, what's going on with the story, and that'll help them take their positions because we're almost like the storytellers for a stock, and we are always trying to figure out what is the current thing that's impacting the stock and how's that going to change. That's usually most of the morning. By around 11:30, 12, I'm usually pretty hungry by that point, so I'll go out, get a meal, or if I bring lunch from home, I'll just heat it up and usually try to take a walk around that time, just clear my head. And around the 1 to 4 p.m., usually things slow down a little bit. Basically, in that afternoon period, I usually try to take it easy. It's either just keep having calls, and so it's just a really busy day, or usually it's at that 1 to 4 p.m., especially if it's not earnings season. I'm usually spending that time updating the financial models. If it's a longer project, I might be reading through different industry journals, reading through transcripts, reading different filings. So this is more the long-term research projects to start building out our coverage and understanding of a company. Usually I'll try to do that around the afternoon. So around 4 p.m., that's when we meet our bankers. So meeting with bankers is very important because we're not involved with the deals itself, but we are there to support the bankers by giving them views of what public investors are thinking. We also update them on what's going on with the public companies we cover, because especially if they're doing something like an IPO, they want us to be the input of the end public investor to help them start shaping the deal and pitching to companies. I remember this one time, our bankers were pitching an IPO for this education company, and there was some talk about what metrics to use. And because there was some accounting changes going on because they were shifting to digital, they were asking us like, hey, do you think adjusted EBITDA would go down with public investors? So it's things like that, like how can we pitch the story? Another example, I remember sometimes bankers, and not to hate on them, but sometimes they really will just give us some of the strangest deals. Like I remember one time they passed along a company and they're saying like, hey, this company has this amount of revenue. They want to raise capital, so sell some shares from public investors so they can do a deal. And as the banker's talking, I just pull up the 10Q, right, the filing, and I can see that they basically have 1 month of cash left on their business. They're not a money-making business. So basically, this company is going bankrupt. Sometimes like bankers are like, right, they're salespeople. Sometimes they get deals that are not necessarily the best for investors. It's not a hate on them. I'm honestly just talking from the equity research side. But in any case, so after that meeting, it's right around 4 p.m. So 4 p.m., if there's another PM release, this is just the same round over again. The earnings will come out at 4 p.m. We'll do our quick flash sort of report and jump on the earnings call, talk to management, ask questions, do a follow-up call. And hopefully, if nothing is going crazy, we can usually bang that out 2 hours or so, updating the model, updating our report with our new view based on our new numbers. And that's usually the end of the day. So usually by around 6, at that point, usually it's just preparing notes for maybe going on the call tomorrow, the morning call. And around 7, 7:30, if there is no more earnings release, sometimes earnings just get stacked. So we have to just keep working until 7, 8, or 9. But if not, usually 7:30, I usually have time for at least one social activity. I usually either go on a date or go to the gym. So for a date, maybe go to a wine bar, go catch a quick show, or just go to the gym and then eat dinner and relax at home. And basically it gets around 9 p.m. I usually sleep pretty early because, like I said before, in equity research, you have to be on all the time, especially in the morning. So honestly, with equity research, I really started to sleep really early and not really go out too much during the week because I needed to be fresh in the morning. But anyway, so that's a taste of what the day in the life is like for equity research. Hope that was fun for you.